Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Prince Pipes. Is it worth buying after a move from 1000 crores to 7,500 crores market cap, or one should avoid it? Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Prince Pipes, his small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And if you can pay $100 upfront, then you get 1 year access by paying for 10 months, so that's a 20% discount. For detailed market or company talk or one-on-one discussion you want to know or you want to have on number of stocks, you can directly email me and we can work things out with a fee. Now about the company. Established in 1987, Prince Pipes provides a range of plumbing pipe solutions and manufactures a number of PVC pipes, sewage, and agricultural pipes. So by now you would have understood that it has direct competition from Astral. There's high profit growth and return ratios of this company. They also provide solutions for borewell systems and water storage. So they are also into agri kind of products when we are talking of borewell solutions. One of the smaller names in this space, which is gaining market share pretty rapidly and could end up becoming one of the larger players in the market going forward. The market cap of the company has swelled from 1100 crores to 7700 crores now. If you look at the numbers, and numbers justifies the move that we have seen in Prince Pipe. So sales have grown by around 73%, profit has grown by around 240%, and that's why the stock has surged 57x. A low debt company, there's high institutional and promoter holding with around 19% free float. The return on equity of 23% is always improving, and there is an operating profit margin of 17%, which is very decent considering the kind of competition we have in this space and the fact that most of the companies have margins in mid teens to lower double digit. If you look at the performance of the stocks, it has been a gem of a stock over the last 15 months. It has done exceptionally well in the last just over a year. A 7x from being, say, around 70 80 rupees. Larger players are buying in the story. So there are larger investors who are buying into these stocks, these type of stocks, whether it is Prince Pipes, you look at Somani Home, you look at other companies in the home furnishing segment, kitchen accessories like Acrisel, etc. So larger individuals, large individual investors are buying into these stories, and that's why the stock has swelled up so much and looks like it's gaining market share, and that is why the margins are improving. I think that there is a slight gain or a nominal gain in the margins or market share as well. So market cap has swelled to around 7500 crores, 7700 crores, and there's decent return ratios, and this has all been the performance over the last 1 year. The salient features of this company had low market cap for such a business. So why did the stock go up so much? So just a little bit of improvement in the results triggered a massive buying into the stock because it was undervalued and had low market cap for a business such as the likes of this with a number of products, a gamut of products portfolio that Prince Pipes has a business has been growing with expanding profits, and that's what we are seeing. Like by what do I mean by expanding profits? It means that the profits are growing quarter on quarter. One of the better small cap companies in this space, still a small cap at less than 8000 crore market cap, and there's scope of strong order book from IRCTC that could come in later on, and from other segments as well. So they try to get it from IRCTC as well as from other segments, get orders from railways as well for pipes, etc. There's scope of margin expansion and better realization once things normalize, and there's a better product mix that we are looking at now. What are the risk attached? The major risk that is attached with the company is it is in the infrastructure segment. Now that is a huge risk. If the infrastructure segment doesn't do well, if completely the economy slows down big time going forward, then we will see these valuations becoming very normal from the current abnormal valuations or skyrocketing valuations. Slowdown in economy will hurt the business altogether, and no one knows how long the sentiment will remain damp for the real estate sector. Now that these are the risk attached. So we know for sure that on the ground the real estate sector is not doing that well, although they are getting orders, and on the back of lower numbers the profitability looks very good, and percentage wise there is growth on the top and bottom line. But once things normalize, whether this kind of a growth will continue, that is the risk that is with such companies. And more shutdown and slower recovery in housing will hurt business, so we might have it going forward, say in December, November, and in that period, that there could be further shutdowns, or maybe even a national lockdown if things really go out of hand. So these are the risks attached with such a business which is related to housing, and debt is high. That is a concern also, and there's heavy competition from other players. We know about Astral, we know about Phenolics, etc., and many other pipes companies, unorganized, organized, so that the competition is extremely stiff, and we need to guard against it. Otherwise, the company is doing well at the moment. If we look at the technicals, so major long-term support lies around the 550 levels, which is still way down, about 20% lower from current levels. So if there is a sudden fall around 560, 570 would be a very good buying opportunity. Otherwise, for a very short term, one can buy at 690, 700 with a stop loss at 630, a 10% stop loss, and probably look for 1,000 going forward. We could see levels of 1,000 even coming together. Our resistance zone is between 780 to 850, so around 800, 850 it is extremely difficult for the stock to cross. Once it does that, then we are looking at 1,000 plus levels on the stock. Otherwise this could be in a range, so we have to look at how the market performs, how the stock performs. It may consolidate here rather than performing really well, and technically it is strong but is extremely stretched. So one needs to understand that the stock per se has gone up a lot, and that's why probably, technically speaking, there has to be a time when the stock may consolidate and decline a bit, and this could be the time at that point of time. And so wait for massive falls in the stock to buy into them. So if the stock goes to 600, 620, those are very good opportunities, or those are very good levels to probably buy into the company. So my call on the stock is hold if you have it, but book some profits if you have made a lot of money. Say you have bought it at 100, and now it's 5x for you. Better to book some profits, or if you have it from 600, 700 levels, hold on to the stock and probably add on any massive declines, and keep track of events and numbers, and probably you'll be fine. So this was my video on Prince Pies. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.